Whoops, I'm sorry. I had the mic on mute. I'm just gonna. It's Mark from Rightline. I'm just gonna quickly read the disclaimer. Then we're gonna go roll right into the webinar. All signals and trading opportunities provided both orally, written, or electronically are disclosed to visitors or subscribers are for educational or demonstration purposes only. Rightline Trading takes no responsibility for any participation by visitors or subscribers within the futures, forex markets, or stock market for any profits or losses that may be incurred. Participation in trading in these markets involves substantial risk. Trading is not for everyone. Careful consideration of your financial position should be made. You need to do your own due diligence, and Rightline Trading is not a registered financial advisor nor a licensed commodities trading advisor. And with that said, what we're going to do is we're going to move over to the charts. Now, I'm really going to show you everything off of crude oil. And I'm going to start with an indicator. This is not novel, but it's an indicator that's new to our platform. And I'm not going to hunt around for different signals. I'll tell you though, it's amazingly effective. And let me just find it. I'm going to show you how our software provides you with an opportunity, and you're going to get them over and over again to take trades like this. That's coming up. Now, what happened was I had these all set, and then I rolled the contract on crude to July, and lost them all. Now, here's the trade, and here's what the indicator is going to do. We have everybody who knows our software understands that our background bias sets a multi-time frame trend up. Now, this is a downtrend, and it's moderately powerful. And you can see that price, for the most part, is going to move to the downside. And when you get dark pink, price is really going to push short. And this sets the multi-time frame trend to the upside. But what does the market do when there is no multi-time frame alignment in trend? And I can tell you what it does 99.9% of the time. It's either going to chop or it's going to consolidate. One of the two. Now, if I asked you to tell me what's the difference between chop or consolidation, it's really definition based, because in either case, within the period of chop or consolidation, you're catching traders in both directions. And it really has to do with how much room you want to give the channel. This is a 17-tick channel. Now, the tighter the channel, the more explosive will be the move out of consolidation. As you make the channel bigger and bigger, it starts to look more and more, or by definition, I would say, you're looking more at chop, because it's still broad-based consolidation in a sense, because there's no definite direction. There's no multi-time frame trend, and price is going to go up and down and up and down, but it's more difficult to assess unless the channel is narrow. So what we have done is we've created an indicator that defines a channel on any kind of bar. has to be set differently for range, it's tough to do on time, and tough to do on tick. But on range and Unorenco, it's very, very easy to create a period of consolidation. And it's very easy to know when consolidation or chop is going to occur, because it almost always occurs when there's no multi-time frame alignment and trend. Now, it can also occur when there is a multi-time frame alignment and trend. And it's going to also trigger then too, if there's a big move up and you get 6 candles in a row, some down, some up, that stay within the channel as defined by the indicator, you can also have consolidation. Now, in this particular case, you're almost always going to break out of consolidation in the direction of the background bias. It's the multi-time frame trend, and you're going to go long. Here is where you have no idea where it's going to break, but you actually always get a hint. And this indicator is going to give you an entry signal and an audible alert to get you into a trade out of consolidation. And here is what makes I'll show you the entry, and here's what makes the trade so powerful. Within this band, you've got tons of traders. Some of them are long and some of them are short. And they're all sweating it out, because as price moves within this narrow range, none of them are going to get stopped out. And they're all praying the price is going to move in their direction. I'm sorry. So when you're below the 50 and you're below the 15, we're going to look for a breakout of consolidation to the downside. All we need is one of two things to signal an entry. First, we need a break. We need a 2/3 candle close above or below the consolidation channel. That's this candle. And then we need either one. Normally, we need more than this to take a trade. But because we've caught so many traders in both directions, that when this begins to move in a break out of the consolidation channel, it's going to rocket out, because all the buyers that are caught in the wrong direction are going to get stopped out. So we don't need background bias. It's one of the few times you're going to get a signal, an automated signal to enter a trade without background and without the quant and the long-term Laguerre. All you need is one of the two, the quant or the long-term Laguerre. If you have one of the two, we can break a lot of our rules, because consolidation is such a powerful move down. Now, I spent last night going back 3 months. I was on these charts till 4 o'clock in the morning, and I could not find a single loser. Now, there are some rules. Consolidation, if it's below the 50 and below the 15, has to break short. You only need the signal of the break short and either the long-term, the multi-time frame Laguerre, or the quant. If consolidation breaks to the upside here you will not get a signal. So you must take it in the direction of the Laguerre below the 50 short and above the 50 long. So we have a few rules. And I'll show you another example. Just ran out of space. It's a terrific signal. And what we're looking for are low risk, high reward entry signals. And here's another one right here. The area is totally clear, no background. And when there's no background, we just know that price is going to either chop or consolidate. Now, we take the bottom channel, the indicator will take it off the candle bodies, not off the wicks. And it's going to create the upper channel off the candle bodies, not the wicks. And you're going to trade the break of consolidation. You're going to extend it out until it breaks and extend it out here. And you get the break of the consolidation right here. Now, this is a trade anyway, but what the consolidation signal is going to tell you is that this, look how far this trade goes on crude. Now, it's not an accident. Now, you're trading right up into resistance, which makes the trade a lot riskier if you decide to take it. And I don't recommend you trade up into resistance. But I just want to give you an example of how powerful it is. Here you have the quant and the Laguerre on the break. And there's the arrow and the audible alert. So you're going to get a long trade out of consolidation. And you're going to get a great trade long. And these trades, you can rarely determine the length of a given trade when you go in. All you can really, this is 30 ticks. All you can really determine is that at the very least, it has a low enough risk configuration to at least get to your first target. But trades out of consolidation allow us, one, to break some of our rules. The indicator will signal what you write into the trade. You're going to get that alert as the candle moves through. So you're going to get the alert prior to candle close. So you're just going to buy the up close. And you're going to be in one tick above the close of the candle. Now, I wouldn't take this trade into resistance, but I just wanted to use it to demonstrate how powerful it is. And most of the time, consolidation begins right inside here. Inside a clear area where there is no multi-time frame alignment. And that's where the indicator is going to be looking. And this is a great indicator to set on multiple charts because you're going to get a unique audible alert intra-candle, and you're going to have plenty of time to get your buy stop or sell stop in and trade a very, very powerful move out. You got a ton of traders here caught short. And once this breaks consolidation, they're all going to start getting stopped out. And the only way for them to get out of their positions is to buy. They got to buy their position back. And it's going to take this trade, and not only will it go up because institutional money is pushing it up, the multi-time frame trend is pushing it up, but it's being pushed up because all these short traders are getting stopped out and they're buying contracts. So it's a very powerful low risk entry that you can set up on multiple charts. Now you need the software to power it because you have to have the quant or the long-term Laguerre to get a signal. It's not meant to be taken bare, because we want to do all our analysis based on a multi-time frame, on a multi-time frame basis. If we have momentum aligned on a multi-time frame basis, we got to trade. If we have the correlative markets aligned to the upside on a multi-time frame basis, we can take the break out of consolidation. Normally, we need both, and we have it here. That's the basis for the trade. And I can show you these trades over and over again. And like I said, I went through this last night for months, and I could not find a loser. Now, on crude, our first target's 7 ticks. So that's what I'm looking for. If it goes 25, it's great. But I'm looking for trades that are going to easily move into our first target, lock in profit, and then hopefully go all the way. And a full winner for us is 15 ticks. This is 30. If you want to take the trade on a trailer, you can get much more than 15. So that's the first indicator. It's not absolutely novel. Trading out of consolidation actually is fairly common. And normally, the direction that price was going in is the direction that price is going out. But this just helps guarantee the continuation of the trade. We want to take a lower risk trade than just taking background bias off the chart, taking the quants and the Laguerres off the chart, taking the 15 and the 50 off the chart. You can still trade out of consolidation based on price action only, but your risk is substantially increased. And we don't want to take trades with risk. That's the objective. I mean, this month, trading the right edge live, we're up over $3,000, and we're on target for a $5,000 month because we take very low risk trades. And this is one that we're looking for. Now, all the heavy lifting and all the work is going to be done by the indicator. It's going to create the channel. I'm not going to tell you how much separation there is because, by the way, I just want you to know, if you're not, we're going to put this on a closed link. And if you're registered or you're here, you'll get the webinar. But we're not putting it on YouTube. We're not putting it on an open link because I don't want anyone to copy the indicator. And as far as I know, no one does it quite like we do, especially the last one I'm going to show you. It is totally unique and incredibly powerful. So you'll all get the replay, but it's going to be on a closed link out of Vimeo. And it's not going to be on an open link on YouTube. So that's it. I don't want to show the same trade over and over again. I just want to show you what we're looking for on the exit out of consolidation, and that it defines a very, very low risk trade. Now, the other, or indicator 2, is someplace else. The reason I was a minute late was because I didn't realize how to redraw everything because I rolled the contract in July. And I sat up here last night drawing out like 12 of them, and I lost them all. And that's why I don't have more than one configured. I actually had quite a few, but I just didn't, I don't have the time to show them all because they're sitting on the June contract, which no longer exists. And here's the trade. And I'm telling you, this trade works over 90% of the time. And the indicator is going to do, again, all the heavy lifting. We only trade with background bias. We want to trade with a multi-time frame alignment, either to the upside or to the downside. Now, in this type of market here, I would not call this consolidation because it's too broad-based. You got a little bit of a move down, it swings up, it swings down, it swings up. Clearly, this area where there's no multi-time frame alignment and trend is a great area not to trade. But, and this does not happen often, if you're below the 50 and the 50's red and the 15's red, and you've got the dual dots and you get triple reds, the quant, the multi-time frame Laguerre, and the chart Laguerre is heading down, you can trade without any background bias. And it's something that normally we never do. And the indicator is going to signal an alert intra-candle, and it's going to get you into the trade. The only thing we need is a pullback. We're not just going to jump in. Let me tell you, this is such a good move. It's almost to the point where you can just jump in. But I really believe you need a pullback and then the continuation, and we will evolve into a multi-time frame trend. If the quant and multi-time frame assessment of momentum and your chart momentum, remember, momentum is an assessment of the increase in speed of price to the downside. And if price is accelerating to the downside, i.e. increasing in momentum, which is the only thing that can lock these Laguerres short and pin their ears back to the zero line on a multi-time frame basis, you're trading with institutional money that just is coming in without a multi-time frame alignment. And sometimes it does do just that. If you trade and wait for the retracement, you can take the continuation. Now you can take the trade off at support, or lock in all your profit, tighten your stop, and hope it's going to go right through. And I looked at these. Now these don't occur often, where you get red, red, and down on clear background bias. Usually you don't develop background bias until all these three come into alignment. And I can show you that. Like you see right here, background bias develops, and you have actually long-term momentum short, red, no quant, only the chart momentum is to the upside. So you don't have any trade, obviously, in this clear period, and not even in this period. And here's the same thing. Here's this clear period, no multi-time frame alignment, and you don't have that triple alignment. So you can't trade it. So you're going to stay out of all of the losing setups. And then finally, well, this is actually a trade. What I want to do is show you an entry that takes place with a clear background. See, right here on this clear, you got nothing to trade. You're going to get no entry signal. Here, you're not going to get an entry signal. So you're not going to get many of these, but if you have them on multiple charts, and here is the trade, right here. You're below the 50, you're below the 15, 15's below the 50, you have no background bias at all. Normally we would not trade this, take this trade, but you have the quant, multi-time frame momentum, and chart momentum heading down to the downside. So background bias be damned, we're going short. And it's an extremely low risk entry. And you get it here. Oh, I'm sorry. You'll notice here, chart momentum is to the upside, right here. So this trade, you cannot take. Chart momentum doesn't roll until you're way off the entry candle. Here's your entry candle. It's got to be an entry here. Here's your entry candle. It's got to be an entry here. or a pullback and continuation. There's no pullback here, and there's no entry. So it's a very, very reliable signal. Let me see here. Here, you don't have order flow. The candle is highlighted in blue and not in magenta. Order flow keeps you out of this trade to the short side. You have to obey all the rules that we normally obey. You need order flow in your direction. You need the quant. You need both the long-term and the chart gear in your direction. And obviously, you must have order flow. You need to show, based on the candle halo, that you've got selling pressure. And here you have buying pressure. And that tells you this ain't going anywhere. So you just don't have a trade here. And here, you don't have your long-term gear. So you have no trade. So everything's got to align. And when it does, like it does here, that's where you're going to get your entry signal short. And the indicator, again, is going to do all the heavy lifting. It's going to look at the direction of order flow, at the direction of the quant, and both the long-term and the short-term gear. It's got to be in your direction. And then you're going to get a signal. And you're going to get it intra-candle. It's a great signal. And I'm telling you, it's going to work for you an enormous percentage of the time. It's not going to work 100%, but it's going to work upwards of 85% of the time. Anything that has that kind of precision is incredibly good. This month, we're trading with 85% precision, right off the back end of the Ninja. I can show you that. And in fact, I'll show you really quickly, because there's so many people out there selling you garbage for tons and tons of money that I just don't want you. I mean, it's the same old stuff rehashed over and over and over again. It's never made anybody any money, and it's just repackaged and it's renamed. And we're at $3,090. I can't fake that. It's right off the NinjaTrader back end. Now, prior to this, I had surgery. I was on the operating room table for 4.5 hours, and I'm very successful. Now, we're at 82.81%. Now, we're on our way, easy to a $5,000 month. You can walk away with $5,000 a month on a $5,000 account. We only trade 2 contracts. If I trade 4, 6, or 8, I can make that number huge, but I trade only 2, occasionally 3, because I want to trade a small number, because most of our traders in the room trade a small number. So we're up $3,000 on a tiny number of contracts that we trade. I mean, you could trade it on a $2,500 account, actually, but I'm just saying, if you have $5,000, we're looking to make 100% this month. Now I'm going to show you an indicator that you will have never seen before. It's never been made. I want to name it after myself, but I think it's a little bit arrogant. I mean, Williams did it, but I just don't feel comfortable doing it. I'm going to show it to you all right off the JPEG. Let me just bring up my desktop. I'm still going to show you all my son's photos and stuff. Hold on one second. Here it is. Now it's it's sort of complex. I can't open the file. Hold on a second. Of course. I'll just open it with Paint, and that'll open it right away. There it is. Now, it's the first volume-based momentum indicator ever created. And it really is going to blow, it blew my socks off. And it's taken Sergio and I a long time to figure out how to do it. Once we have it, coding it is not going to be hard. And let me show you how it works. Now, first, I do want to say there is one other volume-based momentum indicator, and it's called on-balanced volume. And if you've ever tried to use it, the reason nobody ever does is because it really does stink. It's a lagging indicator, and it's really awful. And all it does is it looks at the previous candle's OBV, and if you're in a down move, it subtracts the total volume of contracts or lots or shares that have crossed in that candle time and subtracts it from the previous OBV. So obviously, in a down move, the bigger the volume, the bigger the drop in OBV, and the line moves down. So you want volume to always be rising as the move goes to the downside. So in a sense, it is creating a sort of volume-based indicator. To the upside, it's the same thing. Only here, you take the previous OBV and you add the volume because you want to get a positive number to move on balance volume to the upside. So as the volume number increases, OBV will rise to the upside. So it's based not only on volume, it's based on direction. The only way that you can add volume to the previous OBV is if the candle creates an up close. And that's part of the problem. You can't calculate the OBV. Well, you can calculate it intra-candle as volume evolves. But this is, without a doubt, a lagging indicator. And it is not going to get you into a trade or give you any information as to what's going to take place on the right edge of the chart. I mean, obviously, if price is rising and OBV is rising, then you're rising on increasing volume. Unfortunately, it just doesn't work that well because all of these indicators, except for the one I'm going to show you, require a multi-time frame analysis. And OBV requires a multi-time frame analysis. We've looked at OBV on a multi-time frame analysis, and it's not half bad if you look at 2 higher time frames, but it still isn't so great. So let me show you the indicator that we've created. Now, it takes a little bit of time to think about it in order to understand it, because it's going to be composed of 2 lines. And remember, the indicator is going to give you the entry. So you don't have to really stress about it, but it's important for you to understand how it works. Now, the green line that I have on the chart is contracts or shares or lots crossing for every 10 seconds. We already have that indicator. You can set it for any amount of time. Now, we may use 5 seconds. We may use 15 seconds. I'm not sure yet exactly how much time we're going to use, but it's going to be very quick because we want to catch an institutional move before price moves. Now we're going to put these values into a 3-period EMA. I want to smooth it out. And that's a fast moving average. And that's this green line. And you can see that volume is rising. So You'd like to be in a long move, potentially on rising volume, or in a short move on rising volume. But this is just not enough. We could easily create this line, but I'm telling you, it isn't going to give you really what I think is a look into the institutional trader's mind. I mean, I don't want to call it ESP, but it almost does, because this line, the red line, is the green line multiplied by the change in price in either ticks, cents, or pips. Now, the smallest unit of change is 1. Now, you can't put a 0 in here. If we put a 0 in here, this would come out to, it's either infinity or 0, and we'd have no line. So by default, the smallest change in price can be 1. So if increasing volume and the slope of it is associated with increasing price with the same slope, it's just not a trade that you're particularly interested in based on this indicator. You do have a rising move, but remember, this could be 0. By default, we're setting it as 1. We want the slope in the change in price times the change, times the volume to look like this. Oops. Let me set it thicker. As volume rises, we want that number that we multiply volume by to start really moving up. We want to see 2 ticks, then 4 ticks, then 6 ticks, then 8 ticks. And it's going to drive the slope of this line like this. So what we're looking for is the separation between these 2 lines. And as they separate, you're seeing an acceleration in price to the upside or the downside on increasing volume. Now, volume doesn't have to look like that. Volume could look like this. Whoops, wrong tool. Like this. And you can go like that. I mean, when the institutions come in, we'd like to see volume get driven up. But based on our analysis, here's what you're going to see a lot of the time. Now, I'm going to remove this, and I'm going to show you what you're going to see very often. And this is what we're looking for. And I'm telling you, these are really incredible signals. I'm going to make this bigger. Now, if we get, remember, a rise in price, which is red, and our increase, let me just reset. If our red line, which has as its components volume and delta price or change in price, which is clearly a momentum line, and this line, which is simply increasing or decreasing price per unit time, in essence, also a momentum line. If we see this moving up like this, or we see it moving up like this, flat, and price is going up, we know we really don't have institutional participation, because price is sort of languishing up very slowly. Now, this can be a move that you could take if you have a great entry signal, because volume is increasing. But here's the moves that we want to get with this indicator. There's other ways to get moves like this on rising volume. The moves that it's going to prevent us from taking is rising price on flat volume. If the 3 EMA of price over over 10-second intervals is flat, it's an institutional move. And we don't want to deal with it because it's an unreliable move up. We want to trade when there's institutional participation. And what happens with institutional participation is this. Volume leads price. I am telling you, I have worked on this with Sergio, and this is a fact almost always. Nothing is 100%, but if it doesn't lead price, you won't get a signal. So what's going to happen is you're going to get this. You're going to get volume coming along, and then it's going to skyrocket as the institutional traders move in. And price is not going to immediately do anything. It's still going to stay flat. And then at some point in time, when buying pressure becomes so overwhelming, price is going, you've seen what happens in an institutional move. It's going to skyrocket. And remember, this is price times volume. And we already know what's happening to volume. Volume is creating a strong move to the upside. I mean, this is the delta volume. So it's volume momentum. And when it's associated with a flat price, I'm telling you, if you go long in that flat zone, and remember, we want to go long above the 50 and short below the 50. I don't want to take a counter trend trade. Some of our rules still have to apply. And the institutional traders don't always respect that. And they may take a move that's 5 miles below the 50, create this scenario, and push it up 75 ticks. But just to stay conservative, we're looking for a long move above and a short move below. And everything else is irrelevant because this is going to turn the quant lines. This is going to turn the Laguerre. This is going to make everything move in its direction because this is the nuts and bolts of institutional money. So when the indicator sees this, we have to define these values. It sees this massive jolt in price. It wants to also see price, when it sees this massive jolt in volume, it wants to look for price that's pretty much flat. And get you in at the most advantageous place to ride the move up. And trust me, this is going to go up because nothing is going to take up volume per unit time to a bigger and bigger amount. Remember, if volume stays constant, this line will flatten right out. This has to be increasing volume per unit time to keep that EMA sloping up and pushing higher and higher. And once it reaches a certain critical point that we can't determine, we're going to already be in this trade long. There's no way it's going to go short because institutional money has got this thing. We're probably going to program in a 75-degree slope. That's a really steep slope, maybe 60 degrees, not positive yet. But when we get a 60 to 75 degree move up in rising volume, that volume momentum on a flat price, it's gonna create an updraft that's going to carry price with it. And that's the basis for this indicator. Now, this has never been done before, and this is not complex programming. So this is not going to be rolled out in 3 months or even 3 weeks. It's going to be rolled out really shortly. So those are the 3 indicators. This one has never been done before. And I don't even want the principle of this indicator going up on YouTube, because it can be recreated and it's totally unique. It can, I was thinking of creating just a line that went green or red when all of these parameters met their requirements. And when the line went green, you got your long. And when the line went red, you got your short. But I'm going to project these, I'm going to project these lines, but it's going to have the entry signal projected onto price on your trading chart. You're not going to have to keep looking at this indicator to see when it's going to signal an entry on your charts. Now, initially, again, we're only going to go long above the 50 and short below the 50. This may be so powerful that we can actually, for the first time, I think in history, determine when the institutions move in and create a really opportune counter trend move. I don't know that yet, but these work because we've tested it, and you can just see that it makes sense. It just makes sense. If price is stable on logarithmically rising volume, or geometrically rising volume, not arithmetically rising, eventually price is going to catch a bid and fly. And if you can get in before it does, you're going to catch yourself one big move, because only the institutional players are going to have the power to take this trade up with this kind of slope. Maybe the small commercial traders can create a little bit of an upslope, but only the institutional ones are going to be able to create the kind of slope that we're going to program into this indicator. So this is a one of a kind. It's the first ever done, and that's how it works. And it's a new way of looking at the market. I mean, this is what we're trying to do at Rightline, and I'm not going to go blah, blah, blah. You know, I'm not going to go blah, blah, blah about how great it is, because it's terrific. But it's thinking out of the box. And in assessing volume in units of time, you know, the old volume indicator that just creates volume under a candle. Well, you know what? If that candle sits there for 5 minutes and the power of the bulls equals the power of the bears, what's going to happen to volume? It's going to accumulate. You're going to get a big volume spike in your lousy volume indicator. It tells you nothing, because it doesn't take into account time. And literally, even on Unorenco, I mean, we can get 3 candles move. I mean, yesterday we saw crude move 3 candles in 12 minutes. Let me show you this move, because this is the kind of move we're going to catch from now on, and I'll show it to you. It happened to me yesterday, and it really didn't piss me off, but it's aggravating, and I'll show you the trade. Now, it's a different month. Let me just find the entry, and I'll show you a great example of what I'm talking about. Now, here's the 16th, which is yesterday, and it's not here. It's a long trade. And it was, it was right here. It was right here on the break of this area here, right here, long. Now, in real time, all of these are green, sloping up. And what I did was, if you look at the time here, this is 10:53:10, 10:50, you know what, it was earlier. It was this move up. And it's because I rotated the contract amount. I went from June to July. It really kind of obliterated the trade. But on our trading chart, price moved up 3 candles in 12 minutes. Then institutional traders, I saw the volume. This is our absolute volume in the lower right-hand corner. I saw it go to 5,000. But price was just still sitting there. Then all of a sudden it rocketed up. And when I say rocket, it moved 4 candles in 1 second. But first, the volume indicator was at 5,000. Now, I know it was there at 5,000 more than 30 seconds before price didn't just launch up, it exploded up. And those are the moves that we're going to get. We're going to get in right when the institutional traders start the ball rolling. And we're going to see that jump in volume. And we're going to wait for the volume times price change. And that's going to fly. And we are good to go. That's the indicator. I'm really proud of it. And now I'm going to answer any questions there are. Now, let me show you the offer that we're making today. And it's good till Sunday. I showed you how much money we're up. And obviously that's an accurate amount. We have, I mean, that's my NinjaTrader back end. And I can't fudge it. Let me just find the slide. And we're going to make 5,000 bucks this month. There's all these people who are giving you software that they do not trade. They just want to stick it in your pocket, and they want to run. And I just see so much of it, and it's just so much variation on the same theme. There's nothing new, and the stuff that's around now isn't making anyone any money. You have 2 to 3% of all day traders who are really profitable, who can quit their day job and come in and day trade. And we have a ton of them in our trading room. And I ain't kidding. Now, this is the one-time offer. Now, it's the full system. And it's $13.99, that's your price. Now, it's included with 1 month in the trading room with me. You're going to get a lot of educational videos, more than you can even handle. And only this time, you're going to get these 3 new indicators for nothing, for no additional price. This is the last chance you got to get them without adding a premium. If you already own the full system, you get them for free, because that is one of the mandates of our company. And that is, if you own the full system, we never charge you for upgrades and add-ons. So for the 175 people in the trading room, they're going to get them. And when you come, and if you come aboard and we make additional indicators, you're going to get those. And I'm giving you the opportunity to get them now at no more charge than we had before we created them. And you're going to get them very soon. By the end of next week, I hope to give them all to you. Now, in the afternoon, what we're doing is I spend between an hour and an hour and a half going over the trades or trading methodology. It's just an enormous amount of time. Right now, if you're in the trading room, you're in that session. After Sunday, I am splitting it off because it's so much time and so much effort on my part. And I'm telling you, I get so many compliments and thank yous because I'm telling you, the only way to learn how to trade is to sit and review a live market that you just traded, critique my personal entries, put in the room, well, why didn't you take that entry? Why did you take that entry? What does this mean? What does that mean? After an hour and a half of that, it shakes out till you get such, I mean, everything becomes indelibly ingrained in you. After Sunday, I'm splitting that off too. We're going to raise the price of the software to $29.99, and I'm not joking. It's too good. I mean, this month we're going to make 5,000 in the market. Now, we haven't made it. We've only made 3, but we've already paid for the system. Now, it's going to include the 3 indicators, but the price is $29.99. It's double. And this is just the price if you want to buy these as standalones. We're simply including them in the full system. And I'm taking that educational training session that occurs for at least an hour and normally more, and I'm going to charge for it. I'm not throwing that in. If you buy the training room, if you want the educational session that I spend an hour and a half on every day, which is what, 7.5 hours a week of trading education, it's an additional fee. So this is your last opportunity to get everything that we offer basically for one $13.99 price. And our software works, and I trade on the right edge, and I don't have to essentially make any promises to you, or you have to doubt me. All I really have to do, it's no fluke that's our performance. And I would challenge anybody to be this transparent at 30.90 over this period of time. And these are all our trades, individually taken. I project these every single day. And I get criticized on the internet by an idiot or two who says I don't have a track record. I don't post one on my website because everybody in the room not only gets to see my performance, we critique every single entry. I'm like it's like getting a CAT scan of my brain. I mean, that's how much transparency we have. So that's the offer. I'll just put it back up and let me answer any questions that you might have about the software or the system. Then here's our number. It's also great if you want to trade the micros. Let me tell you, we have formatted templates for the micro E-mini, for the micro S&P, the micro NASDAQ, the micro Dow, and the micro Russell. They are terrific. Our number is 786-732-4656. If you're interested in our phone number, our email is info@rightlinetrading.com. And let me ask any questions that there might be. And there are a lot of people in the room. I really appreciate that. So hang on and let me get the questions. Okay, hold on one sec. There are a lot. Okay. Hi, John from Seattle, Washington. How are you? Yeah, Don. I was kidding everyone in the trading room because the chair that I sit in squeaks, and I was telling them that we're going to make a squeak indicator. And the more squeaks on a trade, the less chance it has of being successful. Because if my chair is squeaking, I'm worried. And if my chair doesn't squeak, it's usually like a killer trade. So the indicator would be inversely proportional to the number of squeaks I get in my chair. Hey, Eric. Thank you. Eric says, Mark, you're the best. Eric, you're a great guy. And I really love having you in the room. Okay, Ronald, when you say why not long on previous bar, I don't know what your question refers to. Remember, breaks are always a 2/3 candle close. It's not just a tick above. And I'm telling you, this is Japanese candlestick dogma. This is how our pivots work. Any area of support or resistance, including consolidation, must be broken by a 2/3 candle body close above or below. So you may be referring to the fact that the candle body previous to the entry candle body didn't break with a 2/3 candle body close. That's what you need. Thank you, Robert. I'm not Rocket Man, Robert. That's Kim Jong-il, the guy in North Korea. Stephen, that channel wasn't broken by a 2/3 candle close. And we can go right back to it and I'll show you. Now that's not the channel. Channel's right here. Here it is. This did not break it. This wick did not break it. This wicks don't do anything. The only thing that breaks this, and this is really key, and I'm telling you, if you don't trade this way, you're going to get hurt. Because you can see this wick to the downside meant nothing. Now it's on an up candle, but this move up or this squeak above the upper channel here didn't mean anything. All the buyers are still here in this upper channel trying to push price down, and all the sellers are still here trying to push price up. This is the candle that breaks the channel. It's the 2/3 candle close. That's what our pivot indicator assesses, and that's the entry that you get. So and let me tell you, if you rush the entry, you have a chance, you increase the risk dramatically on the trade. I don't do it. At least I don't try to. I think today I jumped a pivot by one candle, but you should wait for the candle to be broken. Wait for the pivot or any trend line to be broken by 2/3 of a candle body. Then you're in the trade. And then it's got a great chance of your continuation out of consolidation. I mean, you really want to start stopping out traders caught short, and only that 2/3 candle body is going to start the ball rolling for you to the upside. This little thing here is going to do nothing. Everyone's still going to be sitting, sweating, but they're not closing anything. And this is what's going to rocket price out of the channel. Okay, JM. Thank you, Robert. You know what, Robert? That's a great question. And Robert's asking for the trades out of consolidation and for the trade on the triple green or triple red. Would we amend our automated trade management strategy? And you know what, Robert? That's something that we have to look at. When we get the indicator operational, we're going to look. I have a feeling, this is just my gut, because when we traded range, we had a consolidation indicator. It was a stellar trade that we may be able to look for more out of consolidation than we can on a normal trade. I think we can. The other trade, I'm not so sure, but out of consolidation, I think we can probably increase our targets and push them out. But we'll confirm that by doing 90 days of market replay. Stephen, you'll get these indicators if you're a current user, and you'll start seeing them come in next week. Love the first indicator. I can't wait. I have actually been playing with this idea myself. The issue is exhaustion. You have to be careful. I agree. I agree with you completely, JM. We're going to configure all of that. I propose naming it Bring Home the Bacon Indicator. Robert, I believe it's a Bring Home the Bacon Indicator. I really do. Especially this trade. I love this setup. And I just don't want to wax on and on about it. But if I can find that JPEG, I really love the trade where volume precedes price. And you get that dramatic increase in volume with no change in price. And I can't find my paint anymore. I don't know where it went. Oh, it's right. No, I don't have it here. Hang on one second. Maybe it got closed. But I just love that, that trade. Let me open it with paint. Right here. I love it when you get this astronomical, this blow up in price, in volume on stagnant price, and you're going to get price stoking up. I mean, I hate to say it's a take it to the bank, but when you get one of these, it's going to explode in your direction. Just a matter of when. And it's certainly not going to come down against you, because even though that buying pressure may not be reflected in price to the upside yet, there's no way you can get a trade against this kind of institutional money. Just wait. No, the auto trader is coming out in about a week and a half, because now we got to program these in, and everyone's going to yell at me because it's going to take a little bit more time, but they are going to go into the auto trader. And if you own the software, the auto trader will be half price. I can't give you that for free, but you will get 50% off the auto trader price. If you have a previous auto trader, it's a little different. Tamir, it definitely applies to the Forex. I mean, these are universal forces. When contract or lot number skyrockets on flat price, price is going to go ballistic. It doesn't make any difference whether it's a stock, a future, or a Forex pair. It's operational on any market and on any time frame. And we're going to have to modify the 10 seconds if you're going to trade a longer time frame, but we'll configure it for you. I mean, this is on a 4 Unorenco. If you want to trade a 2 Unorenco, we'll have to go to a faster speed. If you want to trade a 3 minute, we'll determine a better contract per second number. And that's the only number that needs to be configured. That number alone. And what I might ask Sergio to do is to make an input out of that so we can change it easily. Correct. We're looking for this line to cross it. And that's going to be that dramatic increase. Remember, these are calibrated in units of volume. This indicator, even though the price is a component, it's still going to be calibrated in volume. We just know that this is going up crazy, this red line, because that increased volume, excuse me one second, is going to drive price up. Hang on one sec. And let me close my office door because somebody's here to do some repairs. Hang on one second. Now, I just want you to think to yourself, if there's do you ever think there's a dramatic rise in price before there's a dramatic rise in volume? I mean, price is not going to skyrocket on flat, lackadaisical volume. Volume is going to lead it. It almost always does. And when I see the institutional traders come in, by the time I look at the lower right-hand corner of my charts, it's already turning a huge number and price is already skyrocketing. I need an alert to get me into the trades, and this will do that. Yes, I do, Gordon. Yes, we will be putting this into the auto trader, Gordon. All these entries out of consolidation on triple reds, triple greens, and on this dramatic rise in volume just when price begins to tick up or price begins to tick down. Yes, I mean, this entry, I think it's a killer entry out of consolidation. I used to take them all the time out of range, and I'm surprised I let it go so long on Unorenco. And this new indicator is really going to be a blockbuster because this is what always happens. You get a rocket in volume and price for 15, 20, or 30 seconds does nothing. And you're going to have 15 to 30 seconds to get your buy-in or your sell-in before price moves like a bullet. It's not art, but very soon it will be, very shortly. Hey, Philip, when do you expect to evolve these new fantastic new indicators? Listen, once we program them, Philip, you can put them on the Forex. They'll work on Forex, they'll work on stocks. When Sergio configures them, he'll configure it to you. He'll configure it for you on a Forex. You can trade these on Forex. And I know you're aboard, and I know you have the software. You'll be able to trade them on any market. I mean, these are independent forces that move price. I mean, a Forex pair is going to be as responsive to this move as a stock is, as a future is. All we need to do is set that one metric here, that 10. Consolidation also is going to depend on what you're trading, and that's easy to configure. Tamir, you do get them for free. Steven, great stuff, Mark. Your insight is amazing. I always learn when I listen to you. Glad that I'm part of your group. Hope to be here for a long time to come. Thank you, Steven. I hope you're here for a long time to come too. We have guys here for five years in the room. Excuse me 1 second. It's my son. I'm a single dad. Just give me 30 seconds, 15 seconds. Okay, I'm good. My son's still alive, and he looks good. Thank you, Stephen. I really appreciate it. It'll be available, Donna, for both 7 and 8. And if you have the software, you have to have the full system, you will get it. I don't care if you bought it 4 years ago. If you have the full system, you get it. That's just our position. I mean, if you come on board now, when we make our next set of new indicators, you'll get those for free. So the time frame, Don, is irrelevant. I told you, I've had guys I've been upgrading for 5 years. Thank you so much, Gary. For me right now, I can show you how many I'm up. Now I think I'll have too many trades, but even after commissions, I'm still up this week over 1,000. If I just take this week alone, I've had too many trades. Now we're at 1285 and I had 41 trades. And I traded at 78%, which I don't like. I should be at 85%. And you know what? I'll just tell you what happened today. I opened with 2 trades and 2 winners. And on a Friday, that should be it. And if I would have taken those, this 1285 would be over 1485. And I would have had no losers. I took a 3rd trade, it lost. I took a 4th trade, it lost. And then I had to come all the way back and traded to a minus $30. And it's the first drawdown day we've had in 2 weeks. And on top of that, after I stopped trading in the room, there were 3 perfect entries for 3 more winners. And it's just the way it is. It's the way the market is. It can torture you. But if I'll show you the week before, from the 6th to the 10th, and we took only 23 trades, and we made $1,805, and we had 21 winners and only 2 losers, and we traded at 91.30. That's where I want to be. About 25 trades a week, trading above 85%. So we're still pressing higher really nicely. I mean, I want everyone to go home. It's my goal. I can't say I'm going to achieve it, but my desire is to send everybody home after commissions with $1,000 in their pocket on a tiny account. You can trade bigger contracts, you'll make more. That's why I don't trade bigger in the room. David Nathanson, David, who was a great trader, had 10 out of 11 winners this week. Yeah, right. He's asked me if this is going to get his winning percentage up a little. It's like, what is that, like 91, 92%? I'm sorry, David. You've reached the apogee. We can't get you to 100%. Stephen, I'm telling you, if you want the cash internals for NT8, I'll have Sergio work on it. I'm telling you, we took them off. It's just not, it doesn't work. And let me tell you why it doesn't really quickly, because we have a lot of people in the room. The data, it is just not that accurate. And I don't think it was ever meant to be used the way we use it. It streams at an incredibly fast rate. I mean, if you really want it, we have it, and we'll configure it for you. But I don't think, if you got the quants and the dual of gears and the background bias and the dual dots, I don't care what the cash internal line says. You're going long. And if you don't have it, I don't care what the cash internal line says either. I'm not going long. So basically, if that's your assessment of the indicator, it's, I don't think it really works. It doesn't help you. So, but you're welcome to it. It's going to work great on the micro minis. Yeah, Trump tweeted. You got it, Art. That's what we want to get. We want to get his tweets. Somebody announced today that we were ending our tariffs in Canada. Boom. I want to see that roar in price right before we get that skyrocketing price. Futures, Steve. Okay, great. NT7, NT8 Heinz. We'll send you all the recording. Yes, you can use the same one, Sarah, to trade futures, Forex, and stocks. We just have to configure it for you on each one, but we will do that for you. I mean, we're not at the point yet where we're gonna charge you a separate price for each platform. We'll give you one that's formatted for stocks, one formatted for Forex, and one formatted for futures. There's no problem with that. I mean, Sergio's a master. That'll take him a half an hour. Hey, Don. Thank you, great, Peter. Absolutely, Scott. You just call Rory and he'll give you a huge discount. Thank you so much, Ed. Craig, you can use this to swing trade, because remember, I'm telling you, it is time frame independent. And you're going to get these trades on any time frame. And if you want to use it to swing trade, you can. We're just going to have to configure it for you. You're going to have, because the system is so complex, all the other systems, you just set the time. So if you want to trade a 15-minute candle or a 30-minute candle, no big deal, because all the data is coming off of the price on your trading chart. But we'll configure the system for you to swing trade. You just have to give us your swing trade metrics. And it swing trades really well. I use it for my options. And I have an options newsletter. It's called the Elite Trading Portfolio. I'm killing it with options. I just closed out Starbucks yesterday for 70% winning. And I'm up on a ton of options trades. The only one I'm going to take a loser on is Abbott Pharmaceuticals. I also use it to trade micro caps. I'm in 3 or 4 stocks that are 50 cents. And I'm telling you, they're going to blow up. So you can use it to do anything you like. Sure, Damien. I know. I mean, that's the guy. I mean, I don't know why Dean Handley did that. I mean, the guy is just, I'm going to mention his name because the guy is just a real liar. And, what he does is he approaches you and asks you if you want to be on his top 10 list. And if you do, you have to pay him money. So if you say no, he hates you. And he throws up a nasty video. If you look in that video, also Wally Obaka from Right Sided Trading is in it. And he did the same thing to Wally. He offered Wally money. And this is on tape. I'm telling you, this is the truth. Wally told him to get lost. And he posted incorrect pictures of Wally and said that Wally has no track record and is basically a complete bag of nonsense. I have a track record that I post in the room every day that goes into more detail than any other room, I think, in the world. But the problem with Dean is he's never been in my room. He hasn't been in my room in 4 years. That was just in anger. And he can stuff that video. And I don't mind. You can go listen to it. He tells you I'm a horrible guy and that I don't post a track record. Man, if you're in my trading room, you see everything. Just call Rory, Don. He'll give you full credit for that purchase. Gary, if you want a particular, it was so funny. I was thinking of using a wave that sounds like when you step on my cat's tail by accident, and the cat goes ah. But we're going to pick a unique wave. It's going to be different for each indicator. So not only will you get the audible alert, but if you just put a gummy on your computer, you'll know which system is giving you the alert if you're not looking at it. My pleasure, Stephen. It's going to be available next week, NJ. We're going to roll them out one by one by one. Sure, Volker, the problem is it's really hard to find them. And I'm not kidding you. Let me see if I can. It's going to be tough. Volker wants to see a loser. And it's really rugged to find. Right now, I can't do it on the volume indicator because we don't have it programmed. But I'm going to try to find a loser out of consolidation, but they're extremely rare. Let me look for a loser on triple reds or triple. This is the NASDAQ. See, this is a winner, but it's got background bias right here on this entry. So it's going to be really tough to find a loser. I'm telling you. You know what? I'm not going to waste the time, and I don't mean to sidestep your question. I swear to you, it's just very difficult to find a loser because they're not common. Because you need so much on your side in order to get the trade. I mean, you need consolidation in a clear zone and a break on triple reds, here quadruple reds. Just doesn't happen that often. So I'm not going to do it because I don't want to take people's time in the room just by hunting for the loser. Listen, if you look long enough, I promise you'll find one. Nothing trades with 100% specificity. But they're not often. I spent hours last night looking for losers, and it was very hard to find them. I did find them, but To look now would take me a long time. Okay, Stephen. Yeah, this is the NQ chart. And I mean, believe me, it behaves the same way. It really does. The problem with the NQ is we have to find a clear area, and here's your trade. I mean, I think the indicator would create a consolidation channel right here. Now, before that, it's too wide based. And we've got to give the channel on the NQ fairly big, because the NQ has a lot of movement. And here. Now, the fact that we're doing this without any alignment is what's the key. And there's your entry. Actually, that's a little bit early. You have to take the entry right here. There's about 2/3 candle close below. And bam, down you go. But the fact that it's trading out of previous consolidation makes the entry even more powerful, even though you get in it anyway. And I'm telling you, you're going to get these over and over again. The indicator is going to do all the calculating for you. I wish I did to the SAC success indicator. I hope to God it is. I believe it to be, or I swear to you, I wouldn't value them at all. We have a bucket of indicators that we have used and removed, and a bucket of indicators we've created and never used. We've never even put them on. I mean, because a lot of it is trial and error. I've already used the consolidation signal. I know it's great. And the triples, I mean, I've just did 3 months of assessment and it works. The volume-based indicator is going to be a stupendous indicator. It's brand new. Thank you so much, Satish. He said he's very confident that you're well qualified to achieve success. That's okay, Satish. Thank you, Casey. You could get them separately, Melanie, if you want them as standalones. I gave you the price. But let me tell you, if you buy the 3 standalones, it's cheaper to buy the whole system. It's up to you. I mean, the new indicator, we're going to price it $4.99 because it has never been done. And then the triple alert is $3.99 and the consolidation is $3.99. But for this price, you can get the whole system at $13.99. You can get everything. So, and then with the educational training session in the afternoon at $149 a month, at $13.99, you're in that afternoon educational session forever. I mean, so I think you're much better off that way, but you can do it, Melanie. Yes, Joseph, we are creating an auto trader that is going to get you into the trade and manage it all by itself. It's being programmed for 9 markets, and we have to create these indicators and we have to back test them and get them into the auto. And I want to make it the best auto trader ever made. And it's going to trade all the index equities, the Forex, the Dow, the Russell, and the E-mini. And I want it to trade crude, gold, the 6E, bonds, and notes. That's 9 markets. And only take a perfect entry. And those perfect entries have a very high probability of winning. So you don't get many setups. But if you trade 9 markets, you're going to get plenty of entries. What you don't want plenty of is risk. Paul, this is part of our neural net. And what this is telling us on these long moves, I don't want to go into the whole system, is on 2 time frames, on this long move on the NASDAQ, guess what? The Russell and the E-mini are also moving up. So wouldn't you like to take a trade on the NASDAQ long when the E-mini and the Russell are also moving long? We look at correlative markets on multiple time frames. Here, we're taking a perfect short trade on the NQ with the E-mini and the NASDAQ. I'm sorry, or the NASDAQ, the E-mini and the Russell choking down. It increases the probability of a win manyfold. I mean, would you like to take the NASDAQ short when the multi-time frame assessment of the E-mini is long? You want to trade it not only in the direction of the multi-time frame trend of the NASDAQ, but in the multi-time frame direction of its correlative markets. And that's what the dots and the X's do. They always get you in the right direction. And there's going to be, see these candles? These are green dots. Right here, I can show you where you get dots that are in the wrong color. And they censor trades. And they saved me from a loser yesterday and making sure I have the dots in the right color. And I'm not going to look around, but they're very important on the trade. A dual dot entry really increases the probability of a win. The auto trader is going to require them. NJ is on his 5th year with me. Congratulations, NJ. Thank you, Tamir. And I thank you. Tamir says I'm a man of my word, and I am. I do keep my promises. Sure, Philip. We'll do a Forex session, and thank you. Honestly, God bless you too. Really, thank you very much. Oh, right. The Pope just sent me a letter. He's going to canonize me next month. I have to take a day. I don't have to take a day off because he's coming to my house. Hold on. Okay. I'm super excited about the volume indicator. Like you said, we're always late by the time we observe volume. This will make volume useful to us, which is huge. Way to go. It already seems like such a big missing piece. I agree with you, Damon. It really always, galls me when we get a huge institutional move. Like when there's a Trump tweet and the NASDAQ just goes straight up. When Trump tweets, volume is going to skyrocket first. And then 5 or 10 seconds later, price will move. And we're going to make Trump our tweet machine, and we're going to get those trades. And, he's a great president only for his tweets. Every time he says something, he moves the market 150 points. Yes, they'll be recording, Kevin. You know what, Eddie? I'll make sure that Sergio sends them to you on Monday because they're all done. I have all the micro templates done. I have them on NT8, not on 7. And I recommend strongly if you trade the micros, you do it on 8 because the installation on 7, which we can do for you, is very complicated. You have to delete your you have to take off your NT7, put in a new NT7 in order to get those tickers and make sure that they're included in your data feed. They definitely are on NT8, but we have the templates, so I'll make sure you get. I would scream to Rory, but I have my office door closed. Thank you, Scott. Thank you, Heinz. Yeah, for swing trading, just for swing on these indicators, Rory, Gordon, give us a little time, and we'll give you a swing trade template. Edwin, absolutely fantastic webinar. Every second worth my time. I really look forward to next week. My best regards. Thank you to a genius trader. Edwin, thank you so much. And thank you for coming into the room. Dr. Handley, baby, you got it, Stephen. I mean, he can certainly critique people, but he certainly can't trade. And he's got 1,400 diplomas. He's got a JD, an MD, a PhD, an MSNBC, a CNN, and a Fox News Network degree, but he doesn't do anything. And I'm only saying that because he was really nasty. And he didn't even come into my room. Have I changed my approach to how you select options trades? No, Gordon, I look for a perfect entry on a longer time frame. Listen, I also look at open interest. And what usually piques my interest in an options trade is my data feed. And I'll show it to you. I know a lot of traders are not interested, but just because you're such a nice guy, I'll show you. It'll take me 15 seconds. And I'll show you. I don't want to get off point, but I will show you really fast. What I use, hang on, let me just take this over here. I don't want you to, see my X-rated bookmark sites here. Hang on a minute. Actually, I don't really have any, but I'm just kidding you. I'll show you what really helps me on my options trades. And I just gave you my last one. I have a 1.5-year option on Albemarle. They're the biggest zinc producer in the world. And they are so beaten down that I bought a call that matures in January of 2021. And the reason I did was because A, I like its technical setup on our software, and B, there's a ton of other traders who are piling into the trade. So if they like it and big money likes it, I'm taking it too. And I recommended it to everybody. And it's not going to be a rocket ship, and it was a $6 call, but I think Albemarle is going to be 75 to 80 by the end of the year. I mean, 100 by the end of the year. I can't find it. I got so many things here. I'm sorry. But I use the Benzinga data feed, and it gives me all the options trades, all the big options trades for the day. And I really pay attention to where big money is. And then I do the technical analysis. Thank you, Jaspreet. You're right. This is the best trading room, hands down. Thank you. Sure, Damien, you're welcome. You're welcome to do that. And this is, thank you, Russ. Russ, when I tell you, Mark, I just want you to know that while you're showing this webinar, I've been using the NQ chart, and I'm kicking butt today. Your system is the absolute best. I've been trading for over 25 years, and this is the only system that keeps me out of trouble. And in winners most of the time. Thank you for your work. Russ, our only goal is to make it better, and I really appreciate the comments. Listen, we're going to try to configure it all. I appreciate it, Doctor. I really, really do. And this is from Lizzie. I've been in many trading rooms over the past 15 years, and this has been about the most informative, open, and honest room I have ever been in. This room is a bargain. You and Rory and Sergio are the best around. So happy to have joined. I can't wait to see what you're have up my sleeve. Well, I'm showing you my cards, Lizzie, and thank you so much. And thank you, Damien. I don't know yet, Scott. It's a great suggestion. I'm not going to read it out loud because it's complex, but I'm going to put it on my to-do list and take a look. The auto trader really goes through your broker, Volker. Remember, it's going to signal you in through your control panel. So it's going to just be whatever your broker charges you for a round trip. I mean, the broker isn't going to know whether you took it or the auto took it. So it's simply, your commission is your commission. The auto trader, I hope, will be available at the end of next week. Thank you, NJ. You know what, Stephen? I got to look at the DAX and its correlative relationship to the NQ. I appreciate that. You don't need the trade execution platform, Jim. No, you can take it right off your dome. The NDT I think it gives you an advantage in a speedy market, but you don't absolutely need it. You can just trade the super dome, the static dome or whatever they give you. I'll just tell you this. If you have the NDT, you won't have to pay extra for getting that dynamic dome, which stabilizes price. And over the course of 6 to 8 months, you're gonna pay off the NDT, and it's a lot easier to trade. Just my suggestion. That's one of the reasons why a NinjaTrader kicked us off of the ecosystem, because our trade execution platform drops their traders off of that higher price dome. So they don't like us, and I don't care. Paul, you know what? I couldn't even begin to tell you when it's going to be on Sierra. It's going to be in the future, but my recommendation really is to run it off a Ninja and take the entries on Sierra. That would be my recommendation. You can run a demo of Ninja for free, and it's going to do it perfect. You can get a demo data feed, and you're going to get, remember, you're going to get alerted into every entry. And if you're in the trading room, I'm going to tell you the entries I like, and you can just take them on Sierra. I mean, that would be my recommendation. Yes, NT7 and 8 are exactly the same, doctor. Yeah, it's Bachelor of Science. You got it. Thank you, Pat. I got Pat laughing. Hey, Pat, you're on my Facebook page, and you never say hello. I'm so depressed. My birthday passed. You didn't even give me a thumbs up, Pat. Come on, I need that thumbs up on my birthday. He says you don't have it. No, Stephen, I'm telling you, the guy has not been in our trading. Your turkey's back. I'm telling you, Stephen, the guy has not been in my trade room in over 4 years. Trust me, he's not in there, and he doesn't have any of Wally's material. I mean, he was in my trade room in 2014. He called me up. I gave him a username and password, and he came in, and he wanted me to come aboard, but it's the old story. So I'm not on there. And if he wanted to come in again, he could just call me, come in, and he could stay there for as long as he likes. I don't care. I have nothing to hide, and I'm going to show my dome and show everything. And you know, when we get a user section, I'll post a public track record because I'm really proud of how we do. It's just a lot of work to change our website every day, but we'll do it. But he doesn't have a clue what we do. And if he would have been in our training room and made those comments, I'd be a little less upset. But he's not even in there. That's really, you know, the bone to pick. And I don't care what he says. He can say whatever he likes. Thank you, Russ. I love Brazil. I've done my spiel about Brazilian women. I'm a single guy. I can say it. Thank you, Roger. Roger says you have the best trading software available. A lot of wonderful ideas for trading. Thank you. And Roger, I swear to you, is a genius. Roger is one of the smartest, most successful traders I know. Well, Kevin, we got results going all the way back to 2013. If you want all those results, I'll have Rory email them to you on a spreadsheet. I mean, I've kept every trade I've taken since I started the company. So, I mean, I can give you data up, honest to God, going back 5 years. No, it's different, Jeff, and we're going to give you the new one. You've been really patient and a great guy, and you're entitled to the new auto when we release it. Thank you, Scott. Thank you. I really appreciate that. It's great to have you aboard. And I'm telling you, I'm going to do everything I can to make you money. Tamir, it's a good, you know, I'm not going to read it because I don't want to, a lot of traders don't understand the system as well as you do. I have to look at that. I really do. Listen, I learn a lot from everyone in the trading room. I mean, from every one of these questions. We don't know the price yet, Heinz. If that auto trader is trading 85 to 90% winners, it ain't going to be cheap. And I don't even want to set a price until I can see that it's going to trade with that kind of precision, because it's worth zero if it doesn't make you money. Oh, it's all right, Pat. That's okay. I'm just joking you around. I know you don't go to Facebook because you have the same page, you have the same picture up for 2 years, and you never make a comment in there. Okay, when you say auto trader, it executes and manages the whole thing by itself, Joseph. You do nothing. You really don't. And if you have a virtual private server and you don't have to worry about your trades going down, your system going down in the middle of a trade and dropping your stop order and causing a catastrophe for you, then you don't have to sit there and watch it. The luxury of not having to watch the auto would be garnered for you by a VPS or a VPN, virtual private network. We have a great one we recommend. It's called Speedy Servers. They're super cheap. They're like $80 a month, and they're flawless. I mean, if there's like a freaking if your house gets blown away by a tornado, it'll maintain that connection to your broker, and you don't have to worry about the trade being in free fall. My pleasure, Kevin. So listen, everyone, have a wonderful weekend. I hope you come aboard. My goal is to make you money. Always looking for better ways to leverage the market and get everyone in. We're up over $3 grand already. I'm telling you, we're going to make it to 5. And we always subtract commissions afterwards. I mean, I really give you a precise amount of money that you're going to make. They're all going to start coming in next week, Robert. Sergio had to go home today. He had a personal issue. I don't even know what it is, but he just ran out, which he never does. So we know he's got a personal problem. He'll be here on Monday. He texted me, and we'll start rolling these out. Okay. So listen, again, wonderful weekend to everyone, and I hope to see you on Monday morning. And I'm going to be rested and ready to beat this market up. Take care, and again, have a great weekend. Thank you all. Bye-bye.